when I first started in real estate, the idea of raising money was completely foreign to me. So, I just basically put myself out there on social media and started blogging about real estate and telling people what I'm doing. And what I found was there's so many folks who are interested in real estate and want to get involved in real estate, but they just don't have the time, and they just don't know how to. A lot of people they're not even sure that something like a syndication or a joint venture or what have you even exists.
If you're an active real estate investor and you're looking to do larger deals, you're in the right place. We are going to go and take the conceptual type of stuff that you listen to from other real estate podcasts and bring it down to the tactical, the nitty gritty, the actual actionable types of things that other real estate investors that went big did to grow their own real estate empire. You're listening to the Go Big Live podcast. I'm your host, Matt Drouin. Hello, everybody. My name is Matt Drouin. I am the host of the Go Big Live Real Estate Investors podcast. I have today a very special guest named Mike Margarella. Is that right?
Oh, you nailed it.
And you know what? Margarella is one of my favorite cocktails. Is actually let's see. The base spirit is 2 parts grappa. No, actually 2 parts tequila, 1 part Campari, and 1 part Caparno Antico, like Italian vermouth. And that's the Margarella. So, now you know something new.
There you go. I've been called Mike Margarita before, but that works too.
It's the Italian version of the margarita. So I made that completely up. So you can take the IP from that cocktail and just, make a bunch of money from that.
I'm going to add that to the list.
So anyways, I want to get into like a brief bio on you. Let me pull it up here. So, all right. So relatively new to the real estate world, Michael has already made a huge splash in the industry. And looking at his portfolio, I mean, it's been an explosion, I'd say. So starting with fix and flips, Michael's expertise now lies in acquiring undervalued commercial properties and transforming them into lucrative cash flowing assets. With a primary focus on multifamily and self-storage facilities in the Midwest and New York metro area, he knows the ins and outs of rapidly scaling up portfolios for success. Get ready to gain valuable insights, learn from Michael's journey, and discover the challenges and rewards of making your mark in the commercial real estate world. How's that, Michael?
That's awesome. Thank you. Made me sound better than I think I am.
No, thanks for coming on. Seriously. So I like to start the show with asking our guests, you were born and now you're here. What happened in between?
Oh man. Well, so I think like most people, I went to high school, went to college, eventually went to law school, and was just brought up that that is the way to do things. That's how a lot of my friends and folks in my circle were doing it. And that was the definition of success. And that was just the way to do things. And for me, my mindset really shifted when COVID hit in 2020. I saw a lot of folks in my sphere who, lost jobs, lost income, who were very reliant on one thing. And I just didn't want that to happen to me. So I'd always been interested in investing in real estate, and I started to lay the foundation for it probably in 2019 or so. But once COVID hit, that really accelerated the journey for me. And so I started investing in some fix and flips, as you mentioned, some smaller residential properties, some traditional burrs. And I just quickly found out that I wanted something with a little more scale, a little more meat on the bone. So went into the commercial space, and here we are now.
Yeah, excellent. I mean, that's the one thing that I think that your first few deals that are buy and holds, maybe single family, maybe small multifamily, are really the training wheels to figure out, okay, do I like this? And if I like it, I need to scale it. Because as a former residential realtor, I mean, I could do it like clockwork. I would sell a duplex to a investor. They'd own it for 5 years, and then they'd call me 5 years later, and I'd be like, "Dude, Matt, I need to sell this thing," because the novelty of that like $300 to $400 a month kind of wears off, right? You can be like, "Well, I can just I can DoorDash a couple days a month and make that, right? And not have to tie up a bunch of capital and nearly, not nearly amount of headaches and stuff like that." And I think that, it's to learn like, okay, do I really want to lean into this and really build and scale this business? I mean, this mantra I live by, it's like, if you're not growing, you're dying. And so, no, it's awesome you made that leap because a lot of investors don't, and they acquire, these properties, maybe even, small portfolios of 5 to 10 cash flowing rentals, and they pay chump change, and they're management intensive, and they have, high expense ratios because you're dealing with that many more roofs and furnaces and all that stuff. So what was like the seminal moment that happened where you were like, damn, I need to go bigger?
I think it was probably when I was at a real estate conference in Indianapolis. So that's where I started as far as fix and flips and smaller residential properties. And I met a whole bunch of folks who had large portfolios of single family or 1 to 4 in the residential space. And, maybe they had 50 doors or 100 doors or whatever it is. And I just started doing the math, and I thought to myself, man, if these cash flow two, three, $400 a month, like you said, how many is that going to take for me to get to the number that I want to get to? And once you realize what that number is, 50, 100 doors, and you start thinking, do I really want to manage 50, 100 doors with 50, 100 roofs and 50 to 100 mechanicals and tenants and things like that? And that was just when I realized that I wanted to go bigger. It was also late in 2020, I'd say. So there were government moratoriums put in place as far as rent and things of that nature. And that kind of swayed me towards the self-storage space, which, I'm sure we'll touch on later. So I'd say it was a combination of those things that just led me to say, hey, it's time to go bigger.
So was it hanging out with those people that were doing larger deals, which kind of like maybe, I don't know, like gave you confidence, like, all right, this person's made of like the same flesh, blood, and bone that I am. Like I can do this too.
Yeah, that certainly helped. In the beginning, I didn't have a whole lot of those contacts. My contacts were more in the 1 to 4 space. So I was sort of the unique one that was maybe going a little bigger. So I was just going out on a limb there. But as I started to focus in on that space, getting in those rooms with those bigger operators and the folks who were doing bigger deals, that gave me a lot more confidence that, hey, this is actually something that could work if you put the work in, if you make the right contacts, if you put the right systems in place. So absolutely, I'd say getting in the right rooms with the right people was super important for growth.
Great. So you kind of made the decision in your mind that you wanted to go bigger. Like what happened from there? Did you start looking at properties? Like, tell me about that.
Yeah, so we did start looking at properties. First step, once we decided to go bigger, though, was basically education. And although we felt pretty good about our knowledge in the residential space, we moved into the self storage industry. We toured with the idea of multifamily too, but most people that we knew that were going bigger were in that space. So we wanted to diversify just a little bit and maybe niche our focus just a little more and maybe be able to stand out as we present. So we were between mobile home parks and self storage, and just dove into the logistics of both, and ended up choosing self storage. And from there, just learned everything that we could about self storage. And our first deal we actually got just by a random cold call on Google Maps. We found a tired elderly owner who was interested in selling a storage facility that he owned out of state, and that was a smaller storage facility. It's probably not one that we purchase now, but that was the first one, and that's how we got started. And that one was a great learning experience. We basically put all the systems and processes in place that we still employ nowadays, and we basically built our business assuming that we would scale. So there were a lot of things that we, even down to our property management software, things that were just a little more expensive than what this particular property would probably justify and what an owner would normally pay if they were just owning one or two. But we were confident that this was not the first, or this was not the only one. This was just the first. And so, that's helped tremendously as we've scaled, because we haven't had to change over our systems that much. And so from there, we just kept going. And I'd say our next biggest deal was about 6 months later, and it just came through broker relationships, and that was the first one that eclipsed the 500,000 mark that I think we're going to talk about today.
Okay, so that first self storage deal was like the aha, and then this one we're going to talk about was kind of like the oh crap, like, oh, how we're going to take this down sort of thing.
Yeah, that was exactly it. And so pretty much all of our deals to date have gotten larger each time we've transacted. So, we kind of joke, my partner and myself, about man, like if we had thought about this deal 2 years ago, we wouldn't have thought we had a chance. But now it's just every deal, it's just a few $100,000 more, or a million more, or $1.5 million more, and so that obviously entails raising more money, and you know. But at the end of the day, it's just operating the facility the same we would anything else, and so that's what's given us confidence to grow.
Okay, excellent. So this deal came from a broker relationship. Like, where did that broker relationship come from? Like, was this somebody that you called a deal on LoopNet at an earlier point in time? Tell me a little bit about that.
Yeah, when we started out, we didn't have a whole lot of contacts in the real estate space and the brokerage space. So we had made some just in our residential dealings, and so we've been able to keep in touch with those folks. But we basically started from scratch when we moved into the commercial industry. So it was just a lot of word of mouth about brokers that other investors were working with, or even like you said, LoopNet or Crexy. If we'd see a listing on there, we wouldn't so much be interested in the listing itself, but we'd be interested in who the broker was and make a call to the broker and just tell them about us. And from there, just follow up with them as much as we can, maybe on a quarterly basis or so, and just build relationships that way. So this broker who brought us this deal, he is focusing on, I'd say, the industrial warehouse space. And he knew that we were interested in self storage. He didn't have many clients that were interested in self storage. And this deal in particular was unique in that not only did it have self storage units on the parcel, but it also had an industrial warehouse, which is how it came through this broker's funnel. When he saw that it had self storage attached to it, he thought of us, which was great and worked out really well, because apparently a lot of the other buyers that were interested hated the deal because it had self-storage on it and had no interest in operating the self-storage part of the business. So for us, we had a lot of confidence that we can make the deal work because self-storage was our bread and butter. And we had this industrial broker who knew that space inside and out. And we had full confidence in him in being able to lease up the warehouse component of this parcel, which was a pretty large part of the parcel. It's a 5,000 square foot warehouse. And so without him, we probably wouldn't have that same confidence that we'd be able to lease that up, or even have the same confidence that we'd be able to accurately estimate market rent for something like that, because that's a completely different business.
Yeah, so this was 5,000 square feet of industrial warehouse. And then how many storage units were on the property?
It was just about 100 storage units. So
Okay.
again, probably a deal that would be a bit too small for us nowadays. But it was, a unique deal back then that had the self storage and the warehouse attached to it.
Yeah. So what was the unit mix of this self-storage facility?
So it was about 15,000 square feet of self storage. So most of the units were larger, 10 by 20s and 10 by 10s. About 60% of our units were 10 by 15s or larger. So it was a pretty solid unit mix. Generally in self storage, the larger units are in more demand. I mean, it's area specific, of course, but generally we're targeting facilities that have larger units as opposed to a whole bunch of 5 by 5s or 5 by 10s or something of that nature.
Okay. So broker brought this deal to you. Did it have a price attached to it?
It did. It was being marketed at 1.2 million.
1.2 million. Okay. So take me from there. What happened?
So we underwrote the deal. We dove into the self storage side of it. We relied on him pretty heavily to give us estimates for the warehouse portion of it and the expense portion of what that would look like. So we just took that through our normal system there, and we concluded that the best we could do is 1.1 million. So we were a little ways off there, and we knew that the seller had a lot of interest from a few different groups. So one of the things that we were able to do, I think, that helped us stand out was we were willing to do our due diligence in 15 days, just because this property was located right in our backyard where we already had some other properties going. And so we felt pretty good about our team there. We'd already visited the site. And so I think that and the fact that we were really interested in the storage is what really separated us from some of these other buyers, because the seller was nervous that once these potential buyers got into due diligence, they wouldn't really be excited about the self-storage portion of it, or their lender wouldn't, or what have you. So the fact that we kind of cornered in on both helped separate us from some of those other offers.
Okay. I mean, with something I usually don't touch on, but because you're a legal professional, what types of contingencies did you have in this contract? So did you get locked up for 1.1?
We got it locked up for 1.1. I generally do the legal work for our transactions. And so, I had a pretty heavy hand in drafting the purchase agreement and things of that nature. So, we had a lot of the normal contingencies that you'd see in a real estate transaction. I always try to work in there an extra 15 days to close. That
Mhm.
it is, something that we have a right to exercise if we need it, and that's always helpful. If an appraisal is backed up, or your lender is backed up, or if you need an extra couple of weeks to raise some money.
Mhm.
Um, but otherwise, just the normal contingencies as far as physical inspections, environmental inspections, and things of that nature.
Okay, perfect. All right, so you got this thing locked up, and then so you were getting bank financing on this, I take it.
We were.
Okay, so tell me about the capital stack on this.
So we used a local bank to finance. I believe it was 75% of the deal. So they came out, they visited the site. We had a relationship with them beforehand, so they already knew us. They were comfortable with us. They saw the site. They were comfortable with the condition of it. They saw the potential behind it. So that portion was pretty easy, and I'd say we had a pretty good warm and fuzzy before we even went under contract that this was the lender that we were going to work with, and then we had a
Hmm.
term sheet very shortly thereafter, and weren't really shopping it around to a whole bunch of banks or brokers or things like that. And then we brought on some equity by way of just some friends and families,
Hmm.
and we've been able to put that basically into a syndication, and that's how we've raised money for pretty much all of our deals.
So how much equity did you have to raise in this deal?
We raised about 450,000.
So 450 on 1.1. So I take it there was money for down payment, closing costs, maybe some operating capital. Did you budget for some capex as well?
There was some capex associated with the warehouse. We had to get that up to rent ready shape basically, and it was a large space. We had to replace mechanical, some storage doors, latches, things like that. So we thought about financing that with the bank, but just with the terms that they were offering for that, and the money that we had available to us, we decided to just throw that into equity.
Okay. So what was the deal structure on this? So you raised it from I want to get to how you raised it, but what was the deal structure that you were offering on this deal?
So it was a pretty typical syndication. It was a 70-30 split. It was a 6% preferred return.
Hmm.
And, we were lucky from our financing angle. We did have first year interest only. So that helped us stabilize the property.
Hmm.
It took us a few months to get the right tenant into that warehouse space. And I think we did find the right tenant.
Hmm.
It's a dog grooming company who does doggy daycare. So they went in there and they outfitted the space with some dog suites and things of that nature for some of their overnight stays. So it's
Hmm.
a cool tenant. It's super local, and it made us feel good that we have a good tenant in there, and our investors have been pretty happy thus far.
Yeah. So tell me about that. You went to friends and family, right? You got to raise about, almost $500,000. Were you intimidated by that?
Yeah, I mean, like I said, every one of our deals has gotten a little larger. So, when we started with our first one, it was just raising $190,000, and that to us was a lot of money. And every deal we've had to raise more and more.
Hmm.
So yeah, I mean, it certainly was intimidating at first. And when I first started in real estate, the idea of raising money was completely foreign to me.
Hmm.
So, I just basically put myself out there on social media and started blogging about real estate and telling people what I'm doing. And what I found was there's so many folks who are interested in real estate and want to get involved in real estate, but they just don't have the time,
Hmm.
and they just don't know how to. A lot of people are they're not even sure that something like a syndication or joint venture or what have you even exists, and they
Yeah.
just think the only way to invest capital is in the stock market or bonds or something along those lines. So just educating people about the fact that this is available has gone a long way for us.
So did you start the kind of the money raising process or like the planting seeds that you were doing this type of stuff well before you had this property under contract, or was it like a scramble?
Yeah, we started that process as soon as we made the leap into the commercial space.
Hmm.
So we did our best to educate the folks in our network. We started a newsletter and did a lot of things that some of the other larger syndicators are doing. Just so when a deal like this did come along, we felt good about raising capital. And of course, we had some investors lined up who were eager to place capital, and so we knew those folks would be interested in this deal, and we knew we had some time available to us to fund the rest of it.
Yeah. So tell me, like, day one, you got this deal under contract, or maybe you started making these calls or emails after you got the LOI executed. Like, what did that process look like? Was that like an email blast to everybody who's on your distribution list? Give me some flavor on that.
Yeah, so it was an email blast to everyone on our distribution list for sure. Some social media posts about what we were doing, and then some personalized text messages and phone calls to some folks who I knew were looking to place capital and wanted to invest with us. And those were really our first investors. So, having that foundation there from those folks made us feel really good about being able to do the rest of the raise at that point for us. Because otherwise, looking at a $450,000-$500,000 raise at that stage would have been pretty intimidating. So we felt pretty good that we had probably 50% of it lined up
Mm-hmm.
before we even reached out to some folks on our distribution list, and then we would just do a webinar, hop on a Zoom as convenient for certain investors, and just walk them through the specifics of the deal, why we like the deal, and try to close it as quick as we could.
So what was the makeup of these people? I mean, was it like, aunts, uncles, cousins, that sort of thing, or was it maybe former uh, you know colleagues or people you went to school with? What was the makeup on that?
Yeah, a little bit of everything, and a lot of people that you don't expect. So some family for sure, but a lot more friends and just contacts in our network that got our first newsletter or saw some stuff that we were doing on social media and reached out and said, "Hey, I'm interested in real estate," and just staying in touch with them, having occasional calls or interactions with them, and putting them on our email list, of course. So this particular deal, I think we had two or three friends slash contacts as our kind of bedrock investors.
Mm-hmm.
And then the rest of the makeup was just extended contacts in our network.
So what was, like, your investment minimum, I guess, on this deal?
So it has been and it always will be 50,000.
Okay. So you maybe had some people at 50,000, maybe had some people at more than that too.
Yeah, I think our largest investor on that deal was at about 150,000, and then the rest of the folks were between 50 and 100.
Okay. Okay. So how many investors total?
I think we had five investors on that deal.
Okay. Yeah, very doable. I mean, this is the type of thing, like, when you do a deal like this, you're like, okay, we got this done with five investors. The next deal is double that, get that done maybe with 10 to 15. So it definitely becomes a lot more, like, it's a lot easier for to bend your mind around it. I'd say when you're doing that, and I do the same thing. We, like, push the envelope with every single deal that we do. I'm not in the self storage space. I'm more in the multifamily and also office space. I mean, people think I'm a psycho for being bullish on office, but we're getting great pricing on office space, and I think that we're going to get even better pricing going forward. And we're managing risks, of course. So the warehouse was vacant, right?
So it actually wasn't vacant. When we saw it, it had a tenant in place. He was doing shipping and distribution. The seller represented to us that it probably could come vacant, but as we moved on through the negotiation phase, it became more clear to us that it was not going to be vacant.
Mm-hmm.
So we met the tenant that was in place. We felt really good about him, and he was paying rent. It just wasn't market rent.
Yeah.
So we had a discussion with him about what we thought we'd like to charge for the warehouse and sort of our plans for renovating it. And he just understood that it didn't fit his business and it wasn't right for him. So, again, we leaned on our broker there, and because he's so familiar with that space, he was able to grab that tenant as a client and find him a different industrial space that our tenant moved into shortly after closing.
So was this tenant like on a month to month agreement, or like it was a short? Oh, it was.
It was a month to month. Yeah.
Okay. Okay. Um, how was your bank comfortable with that? Was, like, the occupancy so strong on the self storage that this 5,000 square feet of vacant, potentially vacant space? Because I mean, a bank looks at 5,000 square foot tenant that's month to month as
Sure.
basically a vacant space.
Yeah, and that's exactly what they did, right? But yeah, the self storage occupancy was strong. It was hovering around 90%. their rates were under market, and that was the big value add for us, was just coming in on day one and getting those tenants up to market. So we have a different business plan depending on the facility and the area, but for this one specifically, we felt really good about the demographics. So we ripped the band-aid off on day one and increased all rents to market on the self-storage tenants. It's a good space for self-storage. The facility itself is in good condition. It's fairly new. It's gated with security cameras and well lit. And just looking at the competition in the area and just the growth of the area in general, we felt really good that we weren't going to lose a whole lot of tenants. And fortunately, we did fine. Our physical occupancy decreased by a couple points, but our economic occupancy increased substantially. So our bank understood that business plan. They were comfortable with it, and they were comfortable with us. So I think they might have stretched their limits a little bit there and going projection on something like this.
Mm-hmm. Yeah. So when you ripped the band-aid off, what was occupancy at that point in time? Physical occupancy.
Physical probably dropped to about 84% or so.
Okay.
Some folks left, some folks complained and stayed.
Mm-hmm.
It's never easy having to inform tenants that have been there for a couple of years that their rent is going to increase substantially, because you see this a lot in the self-storage space with mom and pop owners who put rent into place 5 years ago, and they just get comfortable with getting that rent check every month, and they don't increase it. They don't keep up with market. And so for us, it's a huge value add to come in and get those rents up to market.
Yeah, absolutely. So getting back to your investors, so you had the webinar, maybe you got some soft commitments. Did you what was the process from there, like in terms of securing those, you knew you had the money to close in this property?
Yeah, so I guess there were probably two groups of investors: the folks who are already really comfortable with us and were just ready to roll as soon as we got our next deal. And so that process was pretty simple. Like I said, it was just a text message, some phone call saying, "Hey, here's the deal," and them just taking a quick look at it. And then there were some folks who we put a little more work into, and after a webinar, maybe after a Zoom, had a more personalized phone call with them and help them get to know us a little better, get to know the business plan a little better. Um, Giving them full disclosure as to the business plan and what's going on there and what we anticipate for distributions, and just showing them the history of what we had done, and how our assets were performing to date. And I think that gave them some confidence to invest in this deal.
Yeah. So the moment somebody says yes, then like what happens is like, hey, here are the subscription documents, that sort of thing. Look them over. If you have any questions, let me know. And then if you don't, sign it and wire this amount of money to our attorney's office. Like what did that look like?
Yeah, that's exactly right. So we use InvestNext for our investor relations and housing our legal documents. So we push all of our investors to go to the website, to make their commitments, review the legal documents, and we let them know that all updates are going to come through InvestNext rather than via text message or email or some other individual means. So we try to get them comfortable with that from day one, because that's a non-negotiable for us. I mean, it makes our lives a whole lot easier, and it keeps everything organized. And I think investors, for the most part, have really enjoyed working on a software like that, because it tracks their investment in real time, and they could log on whenever they want and look at their ROI and their how much cash is in the deal and things of that nature. So so far so good on that front.
Yeah. So InvestNext, okay. So it has the front end capability of, the subscription documents, them wiring the money into whatever facility you had. Right.
Yeah,
And then it has ability to, for you to push out distributions through like ACH and that sort of thing through it.
it does. Yep. So we could put in, our split, our preferred return, how all that looks, and it's just as simple as pushing out distributions on a quarterly basis. And we could push out updates through InvestNext as well. We could send mass emails to investors on certain deals, or even investors on all of our deals.
Yeah, that's awesome. I mean, you really did think about engineering a machine to grow upon, because I mean,
It's
I
expensive, and
yeah.
and yeah.
Yeah, I didn't like. I did not do that for my first few deals. It was like it's We just set them on. I use my banking app to set them up on an on an ACH. Met at the attorney's office to, sign all the documents and that sort of thing. So, but yeah, no, it was really smart of you to do that in terms of, investing in something that maybe had been over engineered for what you needed at the time, but something that was going to make your business very scalable.
Yeah, in the shorter term, there is more pain in paying for something like InvestNext or more sophisticated management software or certain marketing channels and things of that nature. But in the long term, it's worth it. I think it gives us a lot more credibility when we're talking to investors, when we're able to show them these things, show them that these things are part of our systems and processes, and this is just how we do things.
Mm-hmm.
And I think in the longer term, it's a win too, in just not having to transfer systems, transfer CRMs, and get everything loaded into InvestNext or something like that. So, like I said, it was just something where we were confident that we were going to scale, and this is what we wanted to do. So we were just going to do it. That was just what was going to happen. So why not get InvestNext now? Why wait?
Yeah. So you mentioned a we, right? I don't think you're saying you're using it as the royal we. So you have a partner. How did the partnership come to be in existence?
So I actually met my partner at a residential real estate event in Indianapolis, and at the time he was gung ho on residential real estate, and he owned somewhere in the neighborhood of 30, 35 doors in Indianapolis, and he was at a place where I wanted to eventually be. And I think at the same time that I had the realization that I wanted to scale, he had the same realization, and I think he had the same realization as to the moratorium and some of the other things that were going on with housing during COVID. And
Mhm.
so, we just approached each other and kind of both came to self storage at the same time. And he said, "Hey, I think I might have this self storage deal. Do you want to work together on it?" And unfortunately, it's not a deal we ended up closing on, but that sprung a partnership from there. And we put a whole lot of systems in place as to what lanes each of us fly in, and so far so good.
So, how did you carve out the roles and responsibilities and the partnership? Like, who brought what to the table?
Yeah, and admittedly, at first we probably didn't do the best job in carving all that out, but we learned pretty quickly once we had our first that we had to,
Hmm.
and it was essentially we got lucky in a sense that I think we both excel at things that the other one doesn't really like to do.
Hmm.
So I do a lot more of the front end work as far as identifying deals, raising capital, analyzing our deals, putting together the capital stack, and just getting due diligence done through closing. And
Hmm.
he has a heavier hand in just the day-to-day property management. So we're vertically integrated as well. So we have a property management company that we've built that manages our self-storage assets. And so we've done things like build out our own call center, essentially, where all inbound calls are fielded by our folks rather than a third-party vendor. So he's more hands-on on the day-to-day as far as dealing with customers, dealing with maintenance and things of that nature.
Okay, perfect, perfect. Yeah, I mean that's the one thing that's like the biggest challenge with partnerships is like when those roles and responsibilities are, and there's like two people that are interested in doing exactly the same thing. Yeah, I mean, I've been in partnerships like that before where things feel good, but there isn't that yin to the yang. I mean, my current partner David is like super analytical. He's like our runs the operations. I'm more of exactly the role that you're in, right? And I think that and our personalities are very different, but we have a core alignment of values. And also what we're interested in too. We happen to like the same properties as well, so that definitely helps. So, um, I want to get into um, the next step on this. You closed this, and what year was this when you closed it?
This was 2021, late 2021.
Okay, so tell me about where it is right now. Did you refinance it already? What's going on with it?
Yeah, so right now it's about 90% physically occupied. Or economic occupancy is there at 90% as well. We leased out the warehouse to a tenant at market rent. As I mentioned, it's
Hmm.
the doggy daycare slash dog groomer. And so far, they've been a great tenant. Our capex has been addressed, and the facility is in a good spot in general. And yeah, I mean, we are in the process as we speak of analyzing a refinance and what that would look like.
Okay, okay. Yeah. So so you purchased this thing for 1.1, you put some CapEx into it. About how much CapEx?
maybe around $40,000 of
Oh,
capex.
40,000. Okay.
Yeah.
So you got, uh, into it for less than 1.2. Fast forward to right now, what do you think this thing will appraise for?
Yeah, I think it'll appraise pretty easily at 1.5 million. I mean, we've added a lot of value by essentially the day that we purchased the property. The warehouse was renting for about $3,000 a month, maybe 2,950, somewhere in that range, and
Hmm.
we were able to rent it for 4,800, plus some utilities, plus some insurance coverage. So we've decreased our expenses quite a bit through this tenant as well. And then, as I mentioned earlier, we got in there and we raised those storage rents pretty much on day one. So that's been a big value add for us as well.
So is the plan to refinance it relatively soon and return some capital back to your investors? Or what's the plan going forward in terms of like the total business plan, the exit, all that stuff?
Yeah, that is the business plan, is to refinance it, return as much capital as we can to our investors. Hopefully do a full return of capital, because I do think we'll have the option to do that. And
Hmm.
we are getting to the stage where a lot of our investors are wanting to reinvest. They have friends and families who want to invest. So being able to return capital to them is something that's important to them and to us.
Yeah, 100%. So I don't know, what does that deal do for you and your partner today from a financial standpoint?
So right now it's kicking off probably about 8.5%, I'd say, cash on cash return for our investors.
Mhm.
Um, if and when we return all of our capital to our investors, obviously then it'd be an infinite return. So,
Mhm.
knock on wood, hopefully we could get there. And, I think it's a long-term hold for us.
Mhm.
All of our assets are long-term holds. So I'd say somewhere in the 5 to 7 year period. Take as many tax benefits as we can from the property. We did do a cost seg in 2022. So, and then just look at the market in a few years and see if it's worth our while to sell it.
Absolutely, absolutely. Mike, thanks for the story on that. Any other words of advice for our listeners that want to go big before we go into our live Q&A session?
Yeah, I'd say just lean into the uncomfortable. There's a lot of things in my journey that have been uncomfortable, have been unknown, and I think success is on the other side of that comfort.
Excellent, excellent. I heard you say that in a previous podcast you were on, so you've practiced that. Anything else in terms of outside of that? Because that's one thing that I always like stress upon. Like if you're comfortable, then you should be uncomfortable, because if you're not like breaking something, then you're not growing, and if you're not growing, you're dying. So, what other words of advice would you have for somebody looking to go big?
Yeah, and I think it's definitely true. Uh, Other advice, I'd say, there's always going to be something that you don't know. Prepare yourself as best you can through education, through networking, and just surround yourself with good people. I mean, the deal that we spoke about today, I think the reason that we were able to get it to the finish line was just the team that we had in place, and we had the right broker who brought us the deal, and he was the right broker that we had built a relationship with for about a year before then. So I'd say do as much as you can to build your knowledge base, build your network base, build your investor base, of course, and those things really do pay off in the future. And it really is like a waterfall once it starts opening up, and just opportunities come up, investors come out of the woodwork, and just do as much as you can when you're starting.
Got to plant a lot of trees, and those trees start from seeds. But yeah, I mean, it's like, and then you never know, those trees can start producing a lot of fruit exponentially later on. It's just you have to have aggressive patience, and knowing that whatever action you're taking right now, as long as your intention as on creating value, and making those deposits into the universe and those relationships, that the universe will conspire to reward you later on in life. So, everybody, thanks for tuning in. Mike, thanks for being on the show.
Appreciate you. Thank you.
Yeah, we're gonna jump into the live Q&A with our live studio audience. If you're listening right now to the recorded version and want to get direct access to guys like Mike that are just absolutely like exploding out there, I mean, I'm impressed. You got to join the Facebook group that we have, the Go Big Live Real Estate Investors group on Facebook, and get access to our esteemed guests like Mike Margarella, right?
Nailed it.
Okay. Or Margarella. I'm going to Italy on Tuesday, so I gotta
There
practice
you
my
go.
Italian, right? But hey, thanks so much for being on the show, Mike. I appreciate it, man.
Thank you.